everyone. Welcome to another week of Intelligent Investing. I'm April Tan. So the stock market was up again last week for the fourth consecutive week, with the PSEi increasing by another 0.7% to 6,458.2. Market breadth was positive as there were 153 gainers, 117 losers, and average daily value turnover increased to around 6.8 billion pesos, while net foreign investors turned to net buyers for the second week in a row at 1.8 billion pesos. So the market went up last week because of rate cut expectations. On Tuesday, the PSA announced April inflation that was only 1.4%, slower than the 1.8% expectation of the market. Inflation surprised positively because of lower food prices and also lower oil prices and transport prices. So another announcement on Thursday was GDP. GDP growth for the first quarter was only 5.4%. The market was expecting 5.8%. So growth was lower than expected, although that's not exactly good news. The positive side of it is that since growth is slow, inflation won't be a problem. So slower inflation for April plus lower economic growth would mean that the BSP would have more room to cut rates in its June meeting. So last week, the top 5 index gainers were Bloomberg, URC, AGI, ICTSI, and PureGold. Bloomberg was up for the third straight week. This was on news that it is on track to start operating its online gaming business by end May or early June. PAGCOR's disclosure that e-gaming overtook casinos as its top revenue source for the gambling industry during the first quarter also raised excitement towards Bloomberg. For URC, the company disclosed better than expected first quarter earnings last week. The outperformance of URC came from its domestic branded business and also its sugar business, so that helped boost sentiment for URC. ICTSI went up last week after it disclosed first quarter profits that increased by 14%. I think what's important though is that management said that its strong performance during the first quarter had nothing to do with the front loading of orders in the US. And it also said that they were not concerned about the tariffs in the US and it did not expect it to affect its operations. And finally, we have PureGold. So shares of PureGold continue to go up after the company disclosed that during the first quarter, same-store sales for its PureGold stores and its SNR stores remain very strong. Next, we have the top 5 index losers. So for the top 5 index losers, we have Ayala Land, Ayala Corporation, BPI, SEC, and Meralco. Ayala Land was sold off. This is despite the company disclosing that the first quarter earnings went up by 10.4%, most likely because the company said that its residential reservation sales still fell during the first quarter. For SEC, the company disclosed that its first quarter earnings were disappointing, this as it was negatively affected by lower coal prices. The market could continue to go up this week. This after US and China agreed to cut tariffs for 90 days, or what they call the Trump truce. Markets that were open on Monday traded positively, and we expect the same to happen for the Philippines as it continues to trade this week. So the first quarter earnings is in full swing. So last week, we saw another 15 companies releasing their earnings. 9 companies released inline results. 4 came out with above expected results, and 2 released below expected results. So let's first talk about the significant outperformers, or at least those with notable earnings. First, we have Digiplus. Okay, so Digiplus released first quarter earnings that grew by 110%, which was quite impressive. Revenues increased by 69%. This, as the company said, its registered users doubled to 40 million. And of course, because of the popularity of its existing platforms and new games. The company also benefited from better margins because of lower franchise fees, and it also benefited from economies of scale. And because of that, our analyst, Richard Laneda, increased his earnings forecast and his fair value estimates for Digiplus. So the next company is ICTSI. As discussed earlier, its profits increased by 14.1%, and what drove profit growth was the 12% increase in volumes and also successful cost control measures which allowed margins to improve. But I think what's more important is that The company said that the ongoing trade war would only have a minimal impact on the company as only a small portion of its volume is sent to the US. So next, let's talk about the consumer companies that disclosed their earnings last week. So we have three consumer companies, actually three manufacturers that disclosed their earnings last week. We have URC, CNPF, and DNL. So the three companies disclosed higher earnings, as you can see from the table, and their performance was mixed. We have URC disclosing above expected earnings, while CNPF and DNL disclosed in-line results. URC was the best performer among the three in the sense that although its profits only grew by 4.4%, its performance was above expected. This was because its domestic branded consumer food business finally registered growth after 3 quarters of contraction, and its sugar business was able to generate strong revenue growth, which also surprised investors. But then again, on the negative side, it suffered from higher coffee prices. So in CNPF, earnings were in line despite growing by 10.6%. And what was notable is the strong performance of its branded business. However, on the negative side, similar to URC, it suffered from higher commodity prices such as the price of coconut, tuna, and its dairy products or dairy raw materials. Finally, we have DNL, whose profits increased by 10%. Earnings growth was in line. But what was good about its performance was that sales volume was up 33%, its export sales were up by 69%, and Chemres, which is in the biodiesel business, performed very strongly as it benefited from the increase in the mandated biodiesel blend to 3%. However, like the other consumer manufacturers, it suffered from rising commodity prices, so this negatively affected margins. Next, we have the retailers. So the retailers actually had a mixed performance. We have SM and PureGold performing well, and Wilcon, which, as you can see, showed negative earnings growth. Okay, on the positives, let's talk about SM first. SM enjoyed strong revenue growth. It also enjoyed higher margins. So in general, SM is positive. So here we're only talking about SM retail. Next, let's talk about PureGold. So again, as discussed earlier when we were talking about the market, PureGold enjoyed strong same-store sales growth for both its PureGold groceries and also for SNR. But on the negative side, it suffered from faster increase in costs, which is why the earnings just increased by 6.4%, which was in line with expectations. Finally, we have Wilcon. So Wilcon continued to suffer from weak same-store sales growth. So it was down, and it also suffered from lower margins because it had to do more promotions, and it also suffered from higher costs. But the positive thing about Wilcon is that investors are already expecting earnings to be bad anyway in the first quarter. And aside from that, the company said that sales were encouraging before and after the Easter break. So hopefully, we will see earnings turn around in the second half. Next, we have the property sector. So 3 companies disclosed their earnings: Ayala Land, Robinsons, and MegaWorld. Okay, so you can see all the property companies disclosed higher earnings during the first quarter. Ayala Land disclosed inline earnings results, whereas Robinsons and MegaWorld disclosed better than expected earnings. So Ayala Land and Robinsons Land actually, on the positive side, earned higher rental revenues. And both of them enjoyed the strong performance of industrial properties. So for example, for Ayala Land, it enjoyed significant increase in the take-up sales and also the sales of industrial lots or warehouses. Whereas Robinsons Land saw a significant increase in rentals for warehouses. For Robinsons Land, it surprised the market by announcing a 75 centavo per share cash dividend. So given its share price, this implies a dividend yield of around 6%. Okay, but the bad news for all 3 companies is that they all suffered from weaker reservation sales of their residential condominiums. Going to MegaWorld, similar to Ayala Land and Robinsons Land, it also enjoyed higher rental revenues across the board for its offices, malls, and also hotels. So now let's talk about the companies that disclose weaker than expected results for the first quarter. So first we have ACEN, which disclosed a 28.3% drop in its first quarter profits. Earnings disappointed because the company suffered from the outage of its wind farms, lower WESM prices as it had more capacity that it sold in the spot market, and finally it had more debts, so it suffered from higher interest expenses. Next, we have Semirara. Semirara disclosed a 33.5% drop in its first quarter profits, and this was below expected. Semirara's coal mining operations were the main culprit because it suffered from lower than expected coal prices during the first quarter, and also costs were higher than expected. For other news, another interesting development that happened last week was that Security Bank finally completed the acquisition of a 25% stake in Home Credit Philippines. The base price of the acquisition is 10.365 billion pesos. So the positives would be that it would help Security Bank expand its consumer lending business. This as Home Credit is strong in the POS and personal installment lending business. So it will complement Security Bank's existing business that is catering to consumers, which include credit card, auto loans, and housing loans. Initially, Home Credit's earnings contribution to Security Bank would be minimal at less than 10%. But if its business ramps up, then its potential contribution can be much more significant, especially since the consumer lending business is growing at a faster pace. On the negative side, though, Security Bank's capital position would be negatively affected by the acquisition. So Security Bank's CET1 ratio is already down to 12.9% as of the end of 2024 from 15.3% as of the end of 2023. Because of this, the bank would have to control its asset growth to ensure that it is compliant with the BSP's minimum requirement. Another negative is that the acquisition price seems quite expensive. So in 2023, Home Credit was acquired by MUFG and Krungsri for only 24.4 billion pesos. This time around, Security Bank is acquiring MUFG's shares for a valuation of around 41.5 billion pesos. So in a span of 2 years, the price has increased substantially. All active investors in the PSE know that banks are performing well this year. However, did you know that there's another sector that is performing better than banks? While the PSE Financial Sector Index is up by 15.3%, the mining sector index is actually up by 19.8%. And the two stocks that are responsible for the strong performance of the mining sector index are Apex Mining and Philex Mining. Philex Mining is actually up by 124% for the year-to-date period, whereas Apex Mining is up by 86% for the year-to-date period. One of the major reasons for the strong performance of Philex Mining and Apex Mining is the significant increase in gold prices. For the year-to-date period, the price of gold is actually up by 26.5%. And the reasons why gold is up significantly is because there are worries about inflation, economic uncertainties globally, and right now there's also a diminishing confidence in the US dollar as the world reserve currency. Finally, we're seeing more and more global central banks buying gold for their reserves. In 2024, Apex Mining earned 4.3 billion pesos. In contrast, it only earned 3.3 billion pesos in 2022. And the significant increase in its profits was largely because of rising gold prices. On the other hand, gold accounts for only half of Philex earnings. However, it will also benefit from rising gold prices because of its Silangan project, which is finally expected to begin commercial operations in the first quarter of 2026. This was despite numerous delays. So from around 30,000 ounces in 2024, Philex gold production could more than double once the Silangan project is fully commercially operational. This is because Silangan mine has a higher ore grade and larger reserves compared to its existing Padcal mine. If you're curious whether or not the price of Philex and Apex can continue to go up, it's important to determine where gold prices go. If gold prices continue to go up, then most likely the prices of the two stocks will continue to go up. For Philex, it's also important to monitor the progress of its Silangan project. This is because the life of its existing Padcal mine is already expected to end in 2028 unless the company extends it further. Philex's ability to accelerate and secure its future earnings growth will largely depend on the success of its Silangan mine, which is why it's important to monitor the progress of this new project. As we wrap up the show, we would like to remind everyone to stay sharp, stay selective, and as always, invest intelligently. If you want to know more, read the full report when you log on to your COL account. If you found this market rundown useful, hit the like button and subscribe for more market insights. I'm April Tan. Thank you for watching and see you again next week.